All right, guys. So welcome. My name is Brandon. This is Jacob. We're going to be doing
Hello.
a very random analysis here on GBPJPY. We're going to start with Jacob. Then I'm going to come in and do the exact same thing on my charts. Jacob, take it away. Let's go. Talk to me. What do you see?
Right, let's do it. So when I do my analysis, I always start on the higher time frames and then work my way down. Something
Right.
I picked up along the way.
Okay.
So I'm going to start with the weekly. The first thing that stands out to me is my EMAs. That's the first thing I look at, and they tell me we're in an uptrend. The
Okay.
reason I do this is I use the 50 EMA as kind of like my base, is because that's like the last 12 candles, so the last 12 hours. So that's my reference points, and then this is the 200. And the reason I choose that is because I trade mainly on the 15-minute time frame. So 15 times 4 is 1 hour. So it's basically the trend on the 1 hour time frame, or the time frame above, basically.
All right.
So what I see initially on the weekly, the EMA say we're in an uptrend. I see the price action itself says to me we're in an uptrend. But if I'm looking at the last 2 weeks, I'm noticing a slight pullback. So immediately I'd be thinking, I want to trade this long. That's my immediate thoughts, and that's on the weekly time frame. So now I've got my bias on the weekly time frame. I'd go down to the daily, and I'd see we've got one nice push here on the daily, another nice push. So again, I like this for bullish momentum, basically. So I wouldn't be thinking anything else currently. I know we've got a bit of a down, a few days of down here, but that's against the momentum. And I know Brandon emphasizes momentum a lot.
Absolutely.
And I try and stick with the momentum. And it's the one thing you said to me that's really stuck with me. Like, there's quite a few things you said that have stuck with me. One of them in particular, the thing I love the most, is you said how every other job, essentially you're being paid to take action, and the more action you take, the more you get paid. But trading is the opposite, in the fact we're basically being paid to wait the majority of the time.
Absolutely.
Pay tense was the way you put it, patience.
Mm-hmm.
And yeah, that stuck with me. So that's one thing I definitely.
Tell me something, Jacob. What are these green lines here on your chart? What are those?
So previous week's high and previous week's low.
Okay, how do you use that?
Essentially. So there's basically areas of liquidity, and I know there's obviously well, not obviously, there's market makers people talk about them in different groups. It's probably best if I say that, like, I came from Forex here first.
Right.
So they talk a lot about market makers, and that's where my strategy kind of started off. I took their knowledge first. I was in the group chat. The group chat was great. I saw Brandon. I really resonated with what he said. So I then purchased his course, and I haven't really stopped learning. I've taken knowledge from everywhere, put it together. But there's a lot of concepts in one. But essentially, this part here is there's a lot of liquidity generated each week. So quite often, price will react to these areas, the previous week's high and the previous week's low, in order to keep liquidity trapped there.
Interesting.
Or release it.
All right.
So anyway, where were we? I'm still thinking uptrend here. We've got a little bit of a pullback. I'd be wanting to ride this long, so I'd then go down to the 4 hour, which is quite interesting because I'm also looking for M&Ws, and you've seen these come up on my screen there. They just mark 250 pip ranges. They're called quarter points.
Why? What is the significance of these ranges?
The significance of these ranges is the market makers they like to work in 1,000 pip ranges, which can be broken down into 4. So there's not much more I can say about it than I've noticed the significance of them over time. There's another trader that used them. I don't rely on them. They're just something that I turn on and off, and I'm definitely going to turn them off for this purpose. But I don't know. I've seen them. I've used them. They're 250. It's an interesting concept. What I fully don't understand myself. It's something I've recently been trying to work with. So I'm not going to try and explain it because I obviously don't know what I'm talking about entirely.
All right. That's fine.
But continuing on, I like what I see here. So I also use this idea of fractals and peaks. Yeah, high and low. So this would tell me we've had a nice bearish cycle, and for me this is an induction because it's going against the major trend. So once again, I'm not going to try and fight this. I like the fact I've just seen this, because it's against the induction, so I'd be wanting to try and continue to buy this. So I'd then go down to the 1 hour.
What are you looking for on the 1 hour?
I was looking for this to come up. That's what I was looking for. So for me to confirm that we've gone off a peak fractal high and this cycle's complete, to get down to where we could see a peak fractal low, I'd be looking for it to go at least 3 times the ADR, which is 475 pips. So I'd measure from here down to here. That's more than 475. So what I'd do is I'd mark this down here, peak fractal low, and I'd now be looking to trade away from this peak. I like to continue focusing on trading with the momentum. So now what?
Let me ask this, right? So you're saying that when you see price from the peak formation or peak fractal high go 3 times the ADR, which is 475 pips. Anything more than that is where you would begin to look for longs, correct?
Yes, but I'm also going to say that I'll take into account the idea that it doesn't have to do this, and a reset commonly occurs where the price will then make it look like a peak fractal is being created, and then it to continue the trend.
It's interesting because you see, here's what I am thinking about here. So where you are concerned, right? You're interested in looking for buys in after an induction, right? Now, what if around the price where it actually hits the 475? Could you draw a 475 pip range for me from the high and just show me that?
Yes, I can.
All right, so that would be 475. All right, so right around there somewhere, right?
Yeah, right around there.
Telling me around this area is where you begin to look for longs, correct?
Yeah.
All right. So how would that work out? How would you approach this? What do you then do? I'm just trying to figure out what it is.
Yeah. So basically what I'd do is immediately I'd see there's 2 days worth of liquidity being built up around this area. So I'd imagine, well, in order for them to change the trend, they'd have to trap before they change it. So I'll do my analysis on the 1 hour and I'd look for the almost complete cycle. So I'd make sure you've got one level of drop, another level of drop, and we're approaching our third level of drop. I know we're going to see what looks to be a continuation, which is a fake move, and then a reversal. So once I've got my cycle established on the 1 hour, I drop down to my 15-minute for entry. And what I do is I use the Asian session predominantly, and I'm looking for M's and W's either outside of their Asian range, 32 pips generally, or alternatively, it could be a case where an M or W is formed off of an EMA or another point of interest. It's not specifically 32 pips outside.
Interesting. So go ahead.
So for me, I don't trade Monday, so this would be irrelevant. Tuesday, again, I could be thinking about potential entry, but it just looks messy and it's annoying it's not showing my Asian range. I'm going to draw it on just so I can be sure and picture how I normally picture in the morning.
That's about the Asian there.
Yeah. So for me, maybe there's a trade that I like, which is a 50% of the Asian range of W, which I can kind of see happening here is not too clean, so I would leave it. I've learned to be more selective. I used to trade like everything, anything, like whatever I could, but now I'm more selective. Here again, induction there. No, sorry, not induction, but inducement.
So at this point, you're looking for longs.
Yeah.
While you're looking for longs, what exactly are you trying to see?
So if I share my other screen, I can show you. I've got a sort of a process I go through.
Sure.
I have basically just like a checklist, I suppose.
All right, no problem.
Here, so firstly, I mark out and understand the weekly structure, which is what I've showed you first. I want to anticipate where the next week is going to take us with the peak fractal lows and the highs.
All right.
Take that off, confirm my level, my direction, bias, and then I'm looking for a pattern. So I'm looking for a break of structure and a retest, and the timing to be complete. So I generally, what I do is I go through this. This is what I look for. These are some of my ideal criteria. So the Asian range is 50 pips or less. The trading zone is 25 to 50 pips higher or lower than the Asian range. That's where I'm looking. It's because of the way the stop losses are placed. And then the timing. And also when I'm confirming entry, I've got different setups. I take different patterns and I use the EMAs. And then my entry is with a 10, genuinely, I say must have 10 to 15 pip. Now I've implemented, I use like a position size calculator. So it automatically does 2%. So I don't do this anymore. I try to keep 10 to 15 pips, but I'm only ever risking maximum 2% of my capital. So
2%
for
of the
things like gold, so for things like gold, I'll use like, say, a 20, 25 pip stop loss, something like that. But yeah, back to where we were.
All right.
So we've had Wednesday again. Like,
Okay,
I
so
wouldn't want to long
I'm
this.
still seeing your checklist.
Oh yes, sorry. Let me sort that out. Is that better?
Yeah.
Okay. Yeah. So Wednesday again. If I was trading, what I'd ideally want to see is price to just bounce around the Asian range, kind of like it has.
Right.
But I then want it to come out and maybe do something like this for longs. And it kind of tried, but it's just choppy. It's not very nice behavior. Like, I'd want to take ideally like 5-7 trades a month. So it's not worth the risk, basically.
Interesting.
And to be honest with
you, you're bullish on this pair.
Yeah, I would be bullish at this point, because in level 3, where we could reset, we could continue going down, but for that to happen, well, not for that to happen, that would be not as profitable as a trade. Risk to reward wise, I'm best off looking to go long at this point for my strategy. So again, I don't like what I see here, but I'm going to box out that Asian range. To be perfectly honest with you, it's a valid setup, but I doubt I would have taken it on this pair.
We're not trying to force a setup, but we just kind of got ideas of what you'd be looking for.
But what I would essentially do, so I'll go on replay mode and show you where my strategy would tell me to enter. So I'm on the charts. I get on the charts at 8:45, so I'd wake up and this is what I'd see.
Right.
Initially, I'd see a W here, and this W, because the W's happen in Asian range, and this is, I like to measure from here to here, and because this is 3 hours and 45 in nature, I'd say this could be our trap liquidity, so we may not come down to test this, and I've already seen it, so I may be just making a reason that who knows, but either way, that is something I would genuinely look for in my strategy. I can see that the liquidity's already been trapped, so we don't necessarily need to go down that far. Here is a potential entry, because what I've seen is a W formation coming off of the Asian range. We've made a high and we've pulled back. I would check. Yeah, I would have checked it here, to be honest with you. We've pulled back 29 pips. So this is a risky entry. It's off the top of the Asian range. This is this would be an acceptable setup, because what we've seen is we've got a W pattern here, which forms as our anchor. We've made a high, come back. We couldn't break the 50 EMA. We've done an induction, which would get people to go long before coming to take a few of them out here, hence our W formation. If you're from Forex or you've seen a W somewhere else, you know what a W is. But it would be valid because we're above the 13 EMA. But what I'd also check for is this is more than an 18 pip candle. So if I were to take an entry on this, I would take 50% retracement. So theoretically, we'll say I took an entry here and we'll see what happens. So my stop loss, I want it to be around 5-7 pips. So, and
5-7 pips how?
Sorry, off the low, the low or the high.
Okay.
Although actually, this is a higher range pair, so I would maybe put it 20 for this pair. Generally, I like it 5 to 7 on the majors, but this is a non-major, so I'd go a bit bigger. And then, yeah, we'll see how this would play out. So my stop loss would have got hit, and that's part of the strategy, I guess. Now the timing is off, so I wouldn't consider a re-entry here because we're too close to London session starting. Let me delete that. And news, after saying that, I doubt I would trade, to be honest with you. But price came down, it came one level further, made a nice W formation. If I were to take an entry, my only valid entry, well, there would have been a valid entry here because we were above the 13 EMA. That would have got stopped out. I doubt I would have taken that though. And then the next valid entry would have been here. And if I remember seeing it correctly.
So you try to re-enter is what you're saying?
Yeah. Well, I wouldn't. I know for a fact that I wouldn't have taken this trade. Right. But theoretically, if I was following my strategy, this is what I would have been doing.
Okay.
So again, I wouldn't take this trade just because the risk to reward ratio, stop loss isn't really worth it. But yeah, again, straight stop loss, I wouldn't have taken it. But yeah, I guess that's what I'd be looking for, and then I'd wait for the next day and do the same.
That's interesting. I just also realized that we said we would be looking at GBP JPY, and this is GBP.
Oh, I do apologize. It was on GBP JPY. I guess that's fine. I guess now it actually is random.
Yeah, I guess so. All right. So, anything else you want to add before I take over and show you what I would do?
No, I'd love to see what you would do.
All right. So let's go. Let's go to my screen now. All right. So I would approach significantly different. Now, I am also looking at the overall time frame, but something that you said that really stood out is I use momentum. It is the basis of all of the trades that I take. If I don't have momentum, I am not interested. And here's the thing. What I'm interested in is the momentum to be aligned on almost all of the time frames or the different
time frames. That makes sense.
Right. Because obviously, again, if you're looking for a buy, you don't want anything to suggest sells, right?
No,
suggesting sells, it kind of defeats the purpose for the buy. So on the higher time frame, let's go with what you did. You started on a weekly. Now on the weekly time frame, there's no way I would consider a buy because this is a bear market. So automatically, I'm going against you.
I see what you mean. Yeah.
Understand? Now, it's not that you're wrong for looking for the buy. You could look for buys in a bear market, but you would be trading the induction itself. Now, you also said something that when you came down, if I'm not mistaken, I think you said that this move here was the induction, where the sell was the induction. But if it's a bear market, this is actually the move. This is the induction.
That's true. Yeah. If you're thinking that. Yeah, as you said, yeah.
Well, that's my perspective. And any of the viewers listening or watching or whatever, you're free to contest.
No, I agree with you. I wasn't looking in a big enough picture. I was looking at like the last term.
All right.
However long.
So for me, when I look at the weekly time frame and I say, all right, so overall it's a bear market, this only leads me to believe that I should be looking for sells. So what am I doing now? On the weekly time frame, if we go as high as the weekly, I'm looking for areas where the last liquidity might be. And I'm saying, okay, cool, this is one. And then I might say, all right, great. We might have one here as well. And what leads me to believe that these are liquidity areas or areas where the liquidity might be is because these are the areas where price would have either pivoted from, bunch up along or on, or price has been to this area a few times. Anywhere there's a massive amount of traders entering, executing, taking stop losses, hit, taking profit, all of these different things means that there's liquidity or a bunch of liquidity in that area, at least from my perspective. So these areas, these three areas for me are areas of liquidity. So that being said, the fact that prices on this area right now and recently dropped off of it, it tells me that I have just kind of got into a liquidity pool, right? This on this GBPNZD. So for me now, all I need to do is look for things that suggest sells. Now, right now, as I rightfully said, in a market that's bearish, I don't want to see things that align with buys because then that does not align with a sell. And obviously we don't have an alignment. Remember we said we want the momentum to be the same on all the time frames, right?
Yeah.
But on this time frame, when you come from the daily go down, most recently the price is going up. So as of right now, I can't do anything, but I am bearish on this pair. Now, what do I think this is representative of? This here. If we know that this is a bear market, right? If we know that this is a bear market, and in a bear market, any bull move is an induction, that's an induction. This is an induction. This is an induction. So for me, if this is an induction here, if this is an induction, what it says is it's very likely to be trying to grab liquidity from somewhere, likely what we're seeing right here, which would be probably like this. And I don't want to make it arbitrary, just drawing arbitrary areas. It actually does align with previous kind of highs, right? It's likely that it's trying to grab liquidity from this area, right? And that's why it would be such an aggressive move in one candle, because typically that's what you know a grab is. Think of when we think of the term to grab something. If you had to grab something from someone's hand, you're not going to do it slow, are you? You're going to do it quick. You're going to do it in one move, one motion, right? So
Quick as you can.
that's exactly what's happening here. One move, one motion, grab the liquidity so that it can do what it has to do. So for me, you realize I have no indicators on the chart because I don't care about these indicators. Not that they're wrong or they're bad to use, but that's what I'm trying to do. I'm trying to psych out the market in a way that I'm trying to figure out what is the dealer or the person who really controls this industry. What is he trying to do? What is he trying to achieve? If this is a bear market and he's creating this false sense of security for the masses, which will be interested in buys, in my opinion, I feel like that's exactly what he would do. But in this case, I would be bearish. Now, when would I consider a sell? There are two things you can approach this. There are two ways you can approach this. You can consider a sell literally right now, pending how big you want your stop loss to be. Or you can wait until it actually goes back into sell momentum, such as a move like this, whereas it grabbed liquidity from the top side and then started to drop. This bundle or this bunch up here is where you can consider your sell, because this here tells us that it was in bearish momentum previously. It stumbled a little bit and most likely is going to continue, because that's exactly what the market typically does. It will move, stop a little bit, pull back, retrace, and then move again, stop a little bit, pull back, retrace, and then keep doing that. That's exactly what it's doing. Pull, 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 and it's still going. Now, here's what I also want to take into heavy consideration. We have something really interesting here, whereas it dropped, creating lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and then all of a sudden we have a higher high. So what I would want the market to realistically do before I can actually consider the sell, if I am doing it like that, is this area in particular needs to be broken, aka it needs to sell again below this and bunch up underneath here, enter there, stop loss above here, so you'll have a trade looking something like that. That's what I would do. That's literally what I would do. I want to see the market drop again, bunch up here, and possibly drop after that. In here is where I would have my entry. So the trade would look something like this. So like that. That's a pretty wide stop, by the way, but I'm just saying for all intents and purposes. And where I'll be targeting is, if we're being logical about this, is I'm targeting most likely, just a minute. Sorry. I'm targeting this previous, the absolute previous low. Let me see, let me go up here. All right, so I'll be targeting that. We're looking at a minimum almost 1 to 2. And then where I would really be targeting would probably be something like where the last liquidity would be. If I'm being honest, is probably like here, this major zone here. I'll be looking at this. So we're looking at something like that. We're looking at a possible 1 to 3, which is a safe trade. Now, again, this is not a trade I would take because that is a problem. I don't want to take a trade with 137 pips stop loss. That's obviously problematic, right? Because again, the trade would then need to go 460 pips in your favor to just give you a 1 to 3. So this trade, obviously for me, it will have to be something that I would have to take into serious consideration. Is it worth my risk? But I am telling you, I'd be bearish on this pair. That's the way I would look at it. That's the way I would approach it. What do you think?
I like to be fair, I like the way you look at it. The one thing I'd say is you're a long-term trader.
Absolutely.
And I want to know why you picked that approach and why you want to trade over long periods of time. What gave you the idea to do that?
Absolutely, no problem. So over the years I've been trading. I mean, this year will make it 8 years I've been doing this thing. And over the years I've tried multiple styles. I can scalp, I can intraday trade, and I can swing and all of that. And two things really stood out to me. All right. One is, if you're coming into this industry for, money and success and what all of those different things that trading can afford you if you do it right, you don't want to give all of your time to this, because there are other ways that you can make money that do not require you to give so much time to a market. So I don't want to give all of my time to this thing. I don't want to be sitting in front of my charts all day just to get a trade that could, you're just making what you would normally make, right? So I prefer to get into the trade and hold it long term, because if we think about what investing is, that's technically what it is. Holding and ask long term for more or a bigger profit, right? The second thing that stands out to me that makes me want to trade more long term or hold a trade more long term is the idea. I believe it is Michael Fisher of Fisher Investments, if I'm not mistaken. Let me just confirm that for you. If it's not Michael Fisher, it is, what was his name? What's his name just now? So there's this guy. He's obviously like a really, what is this guy's name? Kenneth Fisher. That's his name, right? He has this philosophy where time in the market beats timing the market.
Oh, Larry Livingstone, reminiscence of a stock operator.
Oh, well, I know it to be Kenneth Fisher, but again...
it was in that book, but it might be Kenneth Fisher as well.
Right, I know that's what from my research, that's what I got, that he was the person who invented that saying.
He might well have been, yeah.
Time in the market beats time in the market, meaning if you can trade and stay in the trade as long as possible, it's better than trying to get multiple shorter trades. So in a case like this, I mean, 137 pip stop loss is not the best. But if with a high degree of accuracy, you can figure out the overall direction, take the trade in that direction and have it go in that direction, it's better than trying to get multiple smaller trades, because those multiple smaller trades do add up and create not only a feedback loop where if you lose more, your win-loss ratio goes down, but it also the feedback loop is where it affects your morals then, or it affects the way that you feel about what it is you're doing. Less trades is better, in my opinion, and less trades can be afforded to you by staying in one trade much longer.
That's true.
You understand?
Yeah.
So that's my philosophy on it. Now, again, like I said, that stop loss is definitely problematic in terms of the size of it. I would not trust 137 pip stop loss. So in order for me to take this trade, that stop loss would need to come down drastically. But I digress. I would be bearish on this pair. Now, here's the thing. I could be wrong and you could be absolutely right. But in my opinion, it makes more sense to follow the overall direction of the market than trying to go against it, because in going against it, you're still essentially picking a top or bottom. Now, again, and here's why I'm saying this, that you could be right. I'm not trying to play like I'm the know-it-all, I know what's going to happen. I don't know what's going to happen, and neither do you. And nor is anyone who's listening or watching this at the moment.
It's just a probability game.
It's just a probability. But let's be honest, I'm glad that you said that, because if we think about it, what is the probability of it buying in a bear market versus selling in a bear market?
I mean, the probability for like 60-40, 50-50.
I would argue that the probability of it selling in a bear market is 80-20.
Would you? Fair.
Because if you think about it, it's a bear market. Why would it buy randomly?
No, bear market. I understand. I was thinking more in terms of like if you just entered a position straight away, what's the
Right. No.
chance?
So
No, yeah, I understood. Yeah,
in a
there's
bear market,
definitely a high probability, of course, and the moves are going to be more aggressive and bigger.
that's it. That's it.
Yeah,
Because
no,
again,
I do understand.
what needs to happen in order for the market to buy, the bulls would need to fight against all of that bearish momentum to then stop the market from selling and then have enough power to then turn it around. That requires a lot of liquidity. And if the dealer did not grab enough liquidity from the downside to do so, what is the likelihood of him actually being able to achieve that? So that's the way I look at it. That's the way that I kind of approach it. Follow the overall momentum, and you said it. You said it the best. That's exactly what I do. I am almost always trading with momentum. You can use EMAs, and that's not a problem. As you know, I would have traded with EMAs for a significant portion of my time as a trader. But
Yeah,
I have said it from even from day one. You don't need them. They're only just there to kind of
no,
entry that much easier to achieve because it's one additional confluence. That's the way I look at it.
yeah, no, you're correct.
But you can take them off and you
They're
trade.
derived. Everything's derived off of price, like you say. So
Absolutely. Yeah. What do you think?
yeah, I love your strategy, and we have like my time horizon's very short, so I'm more looking at a weekly cycle. Like I know I went through all the time frames, but the 1 hour and the 15 is really my bread and butter.
Right.
But when I said weekly time frame, I more meant like I think I was looking at like the last couple of weeks. So I want to stress like I'm not against. I agree with what you say when you say long term on the weekly, definitely bearish.
Now,
no mistake.
now I'll
about
tell
it.
you this, right, Jacob? I'll tell you this. For me, the way I see it, you can absolutely buy in this bear market or what would assume to be a bear market. But you just have to take into consideration how far do you think it's going to go? Because again, if we are thinking that buys are temporary, obviously at some point it is going to go back, or we are assuming that it is going to go back bearish because again, the probability of it selling in a bear market is that much higher. So you can buy, nothing is wrong with that. I'm telling you, you could be right, I could be right, and we could both win. But you just have to take more consideration into the way that you place the trade and why when you're going against the overall momentum, which in this case, in my opinion, is bearish. Yeah?
Yeah, I understand. Shoot for less.
So, I mean, yeah, I think we're good to go. Guys, if it is you watching this and you got to this far in the video, kudos to you. Most traders don't have the ability to sit and listen to an analysis this long. So if you're doing that, you're probably more serious than all of the rest. I want to thank Jacob here, obviously, for coming in and giving his 2 cents on what he thinks this asset would have done. Jacob, thank you very much. I mean, honestly, it's a learning experience because I could be wrong and you could be right, obviously, right? We don't know. All right, so I want to thank you very much.
Yeah. Thank you as well. It's been an absolute pleasure.
Absolutely, absolutely. So other than that, guys, you all know the drill. If you want to see more like this, you know it. Like, subscribe, leave a comment what you think. What would you do in this case if you watched it this far? What would you do? Leave it in the comments. Respond to me. Reach out to Jacob. Jacob, if he wants to put his handles in the description, he will do so. If not, you can reach out to me directly and I'll get it out to him. So let me know what you'll do. Other than that, guys, see you all in the next one. Peace out.